Investors are watching AI stocks soar and asking the big question, is this a bubble about to burst, or something much bigger? Dr. Ankur Crawford, Executive Vice President and Portfolio Manager at Alger, has a clear answer. With her PhD in materials science from Stanford and decades managing growth strategies, she's been early on the AI opportunity. In her May 13, 2026 appearance on CNBC's Closing Bell, she explained why the AI build-out is a secular transformation, not a short-term cyclical boom. First, let's clarify the terms. A cyclical trend is temporary. It rises with economic booms and falls with busts, like traditional semiconductor cycles tied to GDP. A secular trend is structural and long-lasting. It reshapes how the economy works for years or decades. Dr. Crawford says AI fits the latter. This is such a sea change in the way we actually compute and the amount of intelligence that's coming out of the computation. It is a secular change. It is not a cyclical change. She's not worried about a bubble right now, it's just too early. Markets may treat AI as cyclical, but that creates opportunity for those who see the bigger picture. Why so confident? AI-related earnings are still too low and likely to stay that way for the next 2 to 3 years. Back in 2024, she predicted hyperscaler CapEx would ramp through 2025, 2026, 2027, and 2028. We're only in 2026 and the spending is still climbing because we're simply short on compute power. The entire supply chain, chips, power, networking, data centers, must scale up. This isn't a 1 or 2 year hype cycle. It's a multi-year adjustment to a new computing paradigm. She points to a baton pass in the US economy, from consumer-led growth to an industrial, AI-driven economy. AI now has its own independent cadence and is dictating market direction more than the consumer. On valuations, Dr. Crawford urges investors to deconvolute earnings growth from multiples. For leaders like Nvidia, massive stock moves often reflect upward earnings revisions for 2027-2028, not just frothy multiples. In many cases, multiples are stable or even shrinking as fundamentals catch up. Her track record backs this. Alger strategies she leads have delivered strong long-term outperformance by focusing on innovation winners beyond just the Magnificent Seven, including smaller AI infrastructure plays that delivered outsized gains in 2025. For investors, don't fight the tape. The secular nature means patience and selectivity pay off, even through volatility. Of course, risks remain. High concentration in tech brings volatility. Interest rates, regulation, or slower adoption could create pullbacks. Cyclical elements within the supply chain will still cause short-term swings. But Dr. Crawford's view, rooted in deep tech understanding, is that the underlying transformation is structural. Companies and economies adopting AI aren't doing it for a quarter or two, it's becoming a competitive imperative. Bottom line from one of Wall Street's most credible AI voices, the AI build-out is still early. It's reshaping computation, industry, and the economy in lasting ways. For long-term investors, this secular shift represents one of the defining opportunities of our era. Stay informed, focus on fundamentals, and consider professional management for high-conviction growth exposure. This is not investment advice. Markets involve risk. Always consult your financial advisor before making investment decisions.